following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the January 14th, wonderful Wednesday, hour 2 of the Trader's Edge here at TFNN. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything to squeeze every little bit of potential. And let's turn this wonderful Wednesday into an extraordinary day. And of course, the easiest way to do that is to always remember what's talked about as a dream, what's envisioned. Well, it gets downright exciting. Of course, what's planned becomes possible, but most importantly, what is scheduled becomes real. And I want to thank you for scheduling your time with me here this morning. I am absolutely grateful for your presence. I'm here to serve you, and the easiest way to do that is to go ahead and pick up that phone and give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, someone else has that exact same question, so don't do it for me. Don't do it for yourself. Do it for someone else. A random act of kindness. That's a great way to start your wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow. She's trading up 161 points at 17,452. S&P down 14 at 2,009. Composite off 14 as well, trading at 46.48. Russell off 4.5 points at 11.75. The DAX is off 60. The FTSE is down 132. She was down quite a bit more than that earlier in the trading session. Leading the charge to the downside out here is Tesla. That's off $11. IHS Inc. off 640. Magna International down 5. Charter Communications off 5. Amazon off 5. Priceline down about $4. No big deal out there. Juno Therapeutics off 370. To the upside, it's Google leading the charge up $6. Mohawk up 5. GameStop up 350. Monster Beverage having a monster day. It's only up 2 7/10%, but nonetheless a monster day. Intrexon Corp up 11%, up $3. Zyopharm Oncology up 49% up there. You've got light sweet crude. She's trading up 63 cents. We'll take a look at that. Gold is up $2. Silver down 20 cents. Again, our call number 877-927-6648. I showed this in the den earlier this morning. We were talking about, and a couple of you caught the first hour, we're talking about a couple of these seventh inning stretch patterns out there. They're beauties to pay attention to. We saw that in the natural gas contract on the daily basis. We pointed that out. It works on all different time frames. Here's the 5-minute chart here for the ES Mini as was forming that seventh inning stretch candle session. That was at the exact time frame and the low that came in here so far that we've seen this morning. I would give you that low if this thing would work for me. There we go. 19.85 out there. So now we're in that fourth move to the upside, but I like those seventh inning stretch patterns. In fact, one of those seventh inning stretch patterns could be forming in the case of light sweet crude. So there is the possibility as we take a look at the daily contract here for light sweet crude. We're going to see Steve-O's got it in a seventh inning stretch pattern. Yesterday's low could be a low for a nice little bounce out there. Remember, a 10% bounce inside of natural gas would be pretty easy. You're trading, I'm talking about light sweet crude, West Texas crude. We're taking a look at if yesterday's low holds, which, by the way, yesterday's low is 44.20. If that low holds throughout today, then you got that seventh inning stretch pattern that says, hey, you could consider taking a trade. What would this bounce to? Well, the real key, as to whether it's more than just a bounce, would be being able to clear the $49. No, it's right around the, we'll call it the $50 mark out there. That's as we speak right now. This is liable to change coming into this afternoon or tomorrow, but right around that $50 area would really give us an idea. Now, the difference between this chart and that we looked at in natural gas is inside natural gas after it made its seventh inning stretch. Its its wave count to the downside out there gave us a nice little bullish reversal signal. We do not have that in place here inside of light sweet crude. So if we were to see this pattern work out, it's nothing more than just a bit of a bounce. That's all, a little counter trend rally inside of light sweet crude. So that's what would be going on there. Nonetheless, let's go take a look at what's going on, what we can expect maybe inside the markets here, because we've got a market that trades both ways. It's trading both ways as we speak right now. If we take a look at the 30-minute chart out here for the ES Mini, what we can see here, you got a nice little morning star reversal candle formation. This took place here coming in to that 10 o'clock hour as we were getting off the air for hour number one. Now what we're seeing is prices trade inside the ES Mini right into its resistance zone, about the 2006, 2007 level. That is its TAS market profile resistance area. We'll see if it can bust through that. If it can bust through that, then we're probably looking at a price move anywhere up to 2025. That's potentially another 20 points to the upside, but that's what it would look like. If we take a look at retracements, let me just switch over here because the retracement ruler is a little bit easier for me to use as well as for you to see. So I'll still put that 30-minute chart here for the ES Mini. It's got the 120-minute time frame chart, but let's go put the 30-minute chart out here. And then we'll go ahead and take a look at the swings. Come on, populate for me. Okay, so if we take a look at swings, really will come from the swing point high out here at that began at 10 o'clock in the morning. That was yesterday, down to the low so far put in. What we'll see is the 0.382 retracement level right around 2010, so your 2004.50. Expect some folks to get off of the elevator as that level gets hit out here. That's on the S&P futures. If we go take a look at what's going on inside of the ETF structures, let's do that. Let's go take a look at the Dow Diamonds first. DIA is the ticker symbol. Let's go see what it has done. It now is trading inside of the swing point from January 6th. It has tested that swing point, the high of that swing point, twice. Both occasions. Well, the first occasion, it did it with about 4 million shares. Yesterday, volume accelerated, 9.9 million shares. Still tested it, still rejected it because that swing has 10 million shares. But you're basically about the same volume. Now you're trading inside that swing point. So long as the Dow Diamonds close inside 179.03. You're trading at 174.51. Volume so far today, 2 million shares in 45 minutes of trading. So in the early session, we've got some pretty decent volume. We'll see how it works today. Nonetheless, you close inside that swing. It says that the bottom can be tested. The bottom is 172.32. That's what's going on inside of the Dow Diamonds, inside of the SPY, the SPY. We know that this closed inside that January 6th swing point twice with light volume. Well, that was up until yesterday. 214 million shares traded in at 209. So you had volume moving into that swing point. That says that that low ought to be tested. So long as the SPY does not close above 202.72, says that chances are 198.85 is going to be tested. We have not seen that take place yet. That low is 199.45 so far today. So 198.85 is the number. If we take a look at the QQQ ETF, what has she done? Again, we're all dealing with the January 6th swing point. We've seen the Qs. This is the third day in a row of at least at this stage of the game, a close inside there. Now that swing had 66 million shares. Yesterday you were into it and closed into it with light volume, 56 million shares. That bodes well for the bulls, not the bears. Nonetheless, you're still inside that swing point. The lows have not been tested. 99.62. Unless the Qs trade above, close above 101.75, expect the 99.62 level to get tested. That's what's going on inside of the QQQ ETF. If we go take a look at the Russell 2000, the IWM. The IWM also trading inside January 6th. That has got 67 million shares. The IWM has been light on volume inside of that swing point. Still, nonetheless, unless we see a close above 117.77, I know I can get it out, you can expect a test of 114.36. So all of these are set up the same way. Russell 2000, though, showing you that it just doesn't have the energy to try to bust it down. But the Russell 2000 will not hold the market up. So if we do see those lows get taken out with volume inside the diamonds, inside the SPY, specifically inside of the QQQ ETF, that gives us a whole new picture. That whole new picture could be or should be an A to B equals CD to the downside and a Gartley buy pattern that you want to be all over. So that's what's going on inside of those ETFs. Let's take a look at a couple of the sectors inside of the S&P 500. Specifically, I think we had JP Morgan out with numbers before the bell. So you've got the XLF down 30 cents. It's got 11 million shares behind the move here this morning. So let's pull this back, see what it's trading into. It is already below the December 16th. Forget about January 6th. It's certainly below that. That had 46 million shares. You've done 11 million shares already today. This says that the B point is being taken out with volume. We have seen basically a consolidation inside of the XLF. That consolidation really beginning back here on the trading session of October 31st. October 31st is when we saw the market go ahead and take off topside because of the announcement from the Japanese bank ministers out there, the central bank. And you can see that the top of that consolidation, well, let me put the top of the consolidation. You can't actually see anything at this stage. $25 is the top of the consolidation. $23 or $24 is a $10 consolidation area. It's the bottom of the consolidation area. Well, $10 from 23 gets you down to, does it 10? What am I talking 10? I'm talking $2. Hello, wake up. So you're looking at about a $2 swing. So you're looking at about $21. $21. What does that take you to? Well, the high of the October 15th level inside the XLF is 22.26. So I would say we want to watch how the XLF trades for some ideas, some trinkets of information with regard to the overall S&P 500. What is it that we know right now? We know that the XLF is below a consolidation. It's got some volume behind the move, volume exceeding the December, should be exceeding the December 16th swing point of 36 million, and as well the January 6th with 46 million shares, so far doing 11 million shares today. If we take a look at the XLK, number one weighting structure inside of the S&P 500, that is trading down into January 6th. That's got 88.7 million shares. You're down with 2 million shares. So you're moving into that swing point so far today with volume. As long as price trades below 40.76. You are at 40.56 right now. You can expect a test of the lows out there, 39.96 inside of the technology sector, the XLK. Let's look at one other sector inside the S&P 500, and that, of course, would be the health sector, the sector that just simply will not die. Of course, we don't want the health sector to die. We want it to have good health, don't we? Well, it's not too shabby as we speak right now. This has just been consolidating much more towards the highs. However, today it is testing January 6th. That's got 13 million shares, and today it has tested it with 4.8 million shares. So the healthcare sector is moving lower so far this morning here with volume. It has rejected the high of January 6th. That is 69.09. You're at 69.84. This is the sector that wants to keep on giving out here. She is, or he is, strong like bull, and there ain't no bull behind that. Right now we got the Dow off 153 points, S&P down 14, composites off 17. When we get back from this break, how about you and I? We go take a spin around the currency markets. Let's go take a look at the metals markets. Let's take a look at light sweet crude and anything else that you'd like. Just got to give me a call, 877-927-6648. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got a fight for first place out here between AGO Pharmaceuticals and the Jazzy one, JAZZ Pharmaceuticals. Actually, it's the Jazzy one that's in first place at $4.78. Then you got Mohawk Industries and Enpro Industries and GameStop. Those are your five leaders to the upside. You got Tesla, Priceline, Amazon, IHS, and Magna International leading the charge to the downside out here. Let's go take a look at some of these stocks, individual stocks, and see what they're doing. Let's take a look at the Jazzy one. Nice move out here today inside. Now this thing here, JAZZ, is the ticker symbol. This had made an A to B equals CD pattern. It completed that back out here on December the 8th. At this stage here, let me see where I can find some decent volume on this equity. Let me put this on a weekly chart. That might be the better way to take a look at ticker symbol JAZZ. It still looks pretty good. Still looks pretty good. Anything of significance out here? You know, this is... you know what it's got on a weekly chart out here, made this little key reversal. It's made a couple of key reversal sessions on a weekly basis. That first one was back in February 2014. That marked a fairly significant, I won't say fairly significant. It marked a high, 176.60 during that week of February 24th. We saw price move down into the lows in April, which was down around the 121 level. So that's a pretty decent move, 170s to the 121 level. level. You had another key reversal week out here, and that was December the 8th, the week that began December the 8th out here. But nonetheless, it's still putting up a good fight, just really consolidating up at these highs here. Any clearance of that December, the week that began December 8th, that high out there at 183.84, that would bode well for the bulls inside of JAZZ, Jazz Pharmaceuticals. Speaking of key reversal, or at least outside days out here, you'd go over into the XAU, Philadelphia Gold and Silver index out here. If we take a look, this is the weekly chart. I'm going to put this on a daily chart out here. You'll see the same kind of candle formation yesterday. When you get an outside, the question is this going? I'd have to qualify this as a key reversal, and the reason that I would is because it at least you got to have an extended condition, and I use the extended condition. I use really two great tools to be able to identify that. One is the completion of an A to B equals CD. In the case here for the XAU, it went ahead and completed a 1 to 2 A to B equals CD to the upside out here. It did that on January 12th, and then yesterday, January 13th, we had a key. Let me see. Do we have a key reversal session? The high 79.99. No, we did not. Just had a bearish engulfing candle out there. Nonetheless, bearish engulfing candle says that we ought to see some kind of retracement. Do you say what kind of retracement, Steve? Well, you really have four real retracement levels. What it's done here this morning, it's made the first retracement level. That is your 0.382 retracement of that A to D pattern out here. Well, the A point was down at 62.94. The D point was out at the 79.99 level. Your 0.382 retracement inside the XAU, its price projection, 73.48. The actual low that we've seen is 73.39. You got to like that. 9 cents out there. That is the first level. If you see it close below 73.48 inside the XAU, then level number 2 will become its target, and that is at 69.45. If we take a look at the HUI, the Gold Bugs Index out here, if we take a look at it, did it have key reversal yesterday? Let's see. The highs 196.28, 196. It did. So the Gold Bucks Index did have an actual key reversal session yesterday, and you've seen a little bit of a lower move this morning. It too, if we take a look at coming from its lows to highs, just to give you some price targets here of what this pattern would set up, it has been a little bit stronger than the XAU from the standpoint it has not made the 0.382 retracement. Of course, I probably was taking it off of this low back here in December. Let me at least use the same kind of a swing point out here. So let's do that from that low. Then we'll probably see that it is that's still a little bit stronger than the XAU out here. So the first target is at a minimum 178.95 or 183.50 as we speak right now. That's what's going on in those two indexes. If we look at some of the mining equities, specifically, let's go take a look at RAND Gold. GOLD is a ticker symbol. Trading up $1.22 right now. Let's go see what it has done out here. It completed a 1 to 1.272 A to B equals CD. Got a little bear sash candle yesterday. So this could signal that it's going to go ahead and pull back. Where's this going to pull back into? You just start taking a look at those retracement levels, the A to D leg out here. And so if we do that inside of Rand Gold, that says your first target is about $70.13. Dow's off 143, S&P down 12. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Next leg to the downside looks like it's beginning here. Dow's off 185, S&P down to 17. We were looking at, I think we just only looked at Rand Gold here. Let's go take a look at Gold Corp, though, because in the case of Gold Corp, that was a big key reversal session, that it had yesterday. Man, right at a resistance level. Now, if we take a look at Gold Corp, and this is really key to the GDX out here, because it had that big downdraft, Gold Corp that is, on October 30th, 21 million shares to the downside. And as it was trying to take on and repair and close that window, only 10 million shares on January 12th, and then yesterday 17 million shares. So you got pressure to the downside. Today here we've seen the bounce has just taken us really right back up into resistance at 21.42 level. You really need to see, what you need to see is not a close above 21.42, although that would be helpful. What you really need to see now is a close above yesterday's key reversal session, which is at, we actually put it up here like this. That's at price point of 21.99. If you see that, then you can say the bulls are back in town when it comes to Gold Corp, GG being the ticker symbol out here. Tesla getting a little bit of a kibosh this morning here, down $13. When we took a look at Tesla, it's off of its session lows. But in the case of Tesla out here, what it's doing, it's moving into the May 8th swing point. The May 8th swing point has got 20 million shares. You've done 6 million shares in an hour's worth of trading. So it's got some volume as it moves and backs into that area. If it takes out the low of 178, then you're taking a look at, if we take a look at A to B equals CD to the downside patterns out here, Tesla could actually be forming its second one right now. Now, the swing point that it's dealing with for the second one is the December 17th level. And that's got 7.3 million shares. Consider you've done 6 million shares to the downside. Trading below or closing below is really what I should say. 192.65 would not be a good scene for Tesla. If we take a look at that A to B equals CD to the downside, your A point is out here on November 18th. Your B point is down here on December the 17th. And your C point is up here on December 26th. Your 1-to-1 A to B equals CD says Tesla could easily target the 161.16, maybe even 142.84 level. So the key to be watching today, you really got two keys, two what I'll say benchmarks to watch. One of those benchmarks being December 17th, that low being 192.65. You're at 191.26. Close below that, you're then below a B point of an A to B equals CD to the downside with volume. The second one is this little swing point low that's got volume of 20 million shares back on May 8th, close below 178. And then I say the fruition of getting to 161.16, 142.84 level, it becomes a real possibility. TSLA is the ticker symbol. Price line, it's trading out at 1,024. It's down 13 bucks out here. Let's go see what Priceline is doing. Priceline is trading into the swing point here from October 13th. The low is 1017.28. It's got volume of 1.8 million shares. Traded into it, the million shares, 871 yesterday. So far today, about 229,000 shares. So Priceline is struggling to take out its swing point. Doesn't have the volume back at that October 13th low as we speak. At least it does not have the volume as we speak right now. In the case of amazing, Amazon down to $6 and change right now. Amazon, let's go take a look at that longer term pattern. Let's go take a look at that. I don't know if it's on the monthly chart or the weekly chart. Let me take a look, see if it's on the weekly chart. I probably have to go draw this pattern back in. I'm pretty sure that I do. So let's see here. Let me leave this on the, let's leave this on the weekly chart. Let me see. Has Amazon broken through? I'm just going to use the trend line tool out here. I'm coming off of the lows from November of 2008. It looks like we got a red line out here. Yeah, how about that? It's actually broken through. It is so this week here, so that's kind of interesting. I'm glad that I pulled this up on my screen for you. Now, what we're looking at here, if you watch this is a weekly chart for Amazon, and I'm just using a trend line. And this has been a trend line that has acted as really strong support. It's been only tested a couple of times here, but that trend line began back in 2008. The exact week looks like November. The week that began November 17th, 2008. The price point for Amazon back then was $34.68. Your next touch point happens to be the low the week that began in Christmas of 2011, the day after Christmas, December 26, 2011. Now, when Amazon moved down, with some conviction, by the way, that was the week of October 20th. It did 38 million shares. This is October 20th, 2014, the week that began. It came right down into that trend line. And then we saw a nice little counter trend rally out here. What Amazon now is doing, we can also see that it's making lower highs, it's making lower lows, but this week it has actually broken that trend. Now, I don't know how the week is going to close out here. If we just see that it was just an intra-week spike, which is a possibility, then no big deal, and the level of support will have been tested and will have held again. If, on the other hand, we see a close below the trend line, a long-term trend inside Amazon has just kicked in here. So what does that mean? Well, let's take a look at weekly swing points. The week that began May 5th, 2014, 22 million shares, and that's at the low of 284. So that's 22 million shares. Down there with 38 million shares on October 20th. That's how strong that trend line was. That then says, and did it close below it? It did not close below it. So it didn't close below that swing point. So the real price level now to be watching And remind me over the coming days, if you will, for us to keep checking in on this. The price point, the critical price point, is going to be 284.38. Well, really a combination of things. You've got volume of 22 million shares. We're light as we speak right now, meaning 9.2 million shares, but we're only on Wednesday at 10:40. Right, so we're not even a third of the way, or not even half of the way through the trading session. So, and we're at 9.2 million shares. There is the possibility of coming into that swing point, or trading below that swing point with volume, more than 22 million shares. So the key level to be watching, in my opinion, my humble opinion, is going to be 284.38. If we see a break, a close below 284.38, then that broken trend inside Amazon is going to take price down to about the price level of 241, at least 241.70, maybe even lower. And that lower could take you all the way back here, all the way back into the week that began in April 23rd, 2012. That's priced out anywhere between 185 to the 228 level. 241 is your 1 to 1A to B equals C to the upside. So Amazon, very interesting. And not as Schultz would say, but I believe that was Colonel Klink out there. And Amazon getting the actual clink. If we take a look at CF Industries, let's go take a look at CF Industries. That would be $6.36 out there. I think it was Artie Schultz that used to say that in Rowan and Martin's Laughing. Was it not Artie? Is that right? Artie Schultz out there? How about that? How about the comedian? One of my favorite comedians. He was the center square. Who was that? What's the guy's name now? It just kind of escapes me. Wasn't he in the center square? Comedian, real funny guy out there. What was his name? Somebody's got to remember that. Paul Lind. Thank you very much. Hey, you can't get anything past our man Al in the control room. I mean, you talk about a guy that is a wealth of information. Paul Lind. Yep. How about that? Thank you very much. RP as well. How about that? This is just we're just old memory week out here. Hey, CF Industries doesn't look too bad on the weekly chart. Let's go see what's going on the daily chart out there. Yep, that was from Laughing. Absolutely. If we take a look at CF Industries, yesterday making a high with volume of about 988,000 shares, backing off a bit today. Light volume so far, about 200,000 shares. CF Industries. I don't see a whole lot inside of this stock chart out here. Let's take a look at, let's go take a look at JP Morgan. Let's look at a couple of financials. JPM out with numbers, missing numbers, I believe, before the bell out here. Gapping down this morning. Has volume here of 12 million shares. 12 million shares. The swing point low looks like it's October 15th. It's got 37 million. Yeah, 37 million. So the top of which it's already trading inside. So it looks like JP Morgan is going to go ahead and make a run, at least make a run for the low of $54.26. You're at 56.43 as we speak right now. If we take a look, if it breaks through that level, if it breaks through that, then it ought to head back into the May 16th swing point, 2014, down around the price point of 52.97 or so. That's on JP Morgan. I don't know if who else is out with numbers financial-wise. Bank of America, are they coming out soon? BAC, maybe Wells Fargo. Let me see what Bank of America, not necessarily, I don't know if they were out with numbers. Let's see here. I don't show anything there. But nonetheless, the stock chart in sympathy of JP Morgan out here, it is also trading back inside its swing point from October 15th. Now, that had volume there of 216 million shares. You're at 40 million shares today. So volume actually is pretty decent as we speak right now. Yeah, that's got volume coming into that swing point. That's so as we took a look at the XLF and see that sector inside the S&P 500 is absolutely struggling. Speaking of struggling, let's go see what the energy sector is doing. XLE. Let's go see what kind of energy or lack of energy that it has. Now, the XLE is actually testing. Let me get rid of the A to B equals CD pattern out here. There we go. It's actually testing the December 16th. This is a daily chart. It's testing that December 16th low. It looks like 72.51. The low so far today, 72.37. Now, the 72.51 had 57 million shares. Let's put our line across the chart out here. So you've got a test in the XLE of its swing point. So far, again, volume-wise, you're going to be benchmarking 57 million. Today, so far, it's done about 14 million shares in a little over an hour. So 14.6. Yeah, you're coming into that level here with volume. We'll see if it can bust it down. That'll be an interesting piece of information for us to gather. That's from the energy sector, the XLE. All right, so what have we not looked at? Let's go take a look at Goldilocks out here. If we take a look at gold, trading at 1239 doesn't really look too bad out here. We know that gold broke through its trend line. That trend line coming back from July the 10th. That's the diagonal level of resistance out here. It broke through that. It's also dealing with horizontal resistance. That's the swing point on that wide-ranging bar that was on the trading session of December 10th. That's at the price point of 12.39. You're trading at 12.3870, 30 cents below that level. If it can't clear 12.39, even Steven out here, maybe what we see inside of gold is a test pull back into that trend line, which we really, in essence, haven't seen. A test of that trend line, and then maybe it's a catapult to the upside out here. And that's what's going on inside of Goldilocks. If we go take a look at silver, see what hi-ho silver is doing, back 16 cents, trading out at 16.99. On its daily chart, it's also got a line of resistance out here. That line of resistance kind of extends in about the 17.25 level out here, which is really where price found resistance yesterday, up at the 17.21 level. Nothing really bearish about this. We do see some fairly decent volume inside of silver today, but it needs to close above 17.25 out there. And then you've got a nice little consolidation break. In the case of a light sweet crude right now, that's trading up 42 cents, trading out at 46 bucks. We have not seen a reversal signal. We do know we were taking a look at the first segment of today's show. We were taking a look at that seventh inning stretch pattern to the downside. So it is possible that yesterday's low, if that holds, which is 44.20, that we do see a decent counter trend rally, 10% rally at least. That would be get you up into the $50 range inside of a light sweet crude, but it needs to not take out yesterday's low in order for that to occur. Natural gas, we pointed out that it had formed that nice seventh inning stretch candle. That was 2 trading sessions ago on January 12th, but then a nice little bullish reversal signal here yesterday, some follow through today. We're looking at $3.21, 347 as likely the next target on this nice counter trend rally that's inside of natural gas. Currency-wise, we've looked. I don't know if we've looked at the euro. Let's go. Let me switch. Let's look at the euro. Let's go take a look at it. The euro here just really working off an oversold condition by really working sideways over the last 5 trading sessions, but no bullish reversal signal here. The euro really tells us on a weekly chart that it wants lower price. It wants much lower price. That much lower price taking you into the 1.109 level. And that is longer term with regard to the euro. So we've looked at some currency pairs. We've looked at a couple of ETFs. We looked at gold. We looked at some miners. I think our work is basically done for the day. Should we just have Al? Should we just have him cue it up and just listen to some music? Maybe we go ahead and we do. You guys in the den, you type in some of the tunes that you want. In fact, you should type in some of the tunes that you want Al to play, at least during the at least in between segments out there. The top hits. He's the Casey Kasem of TFNN, for goodness sake. So you got to give Casey Kasem. Now, of course, the new guy is, who is the new guy? Here's the new guy. What is the new guy's name out there? What is the new guy's name? Get the new guy who's taken over for Casey Kasem. In any event, I think it's Al. Inside the Tiger's Den. In any event, we're going to go to break here. Right now, you got the Dow is off 165. S&P down 14. Composite off 20 points. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 177 right now. S&P is down 15. Composite off 25. Have a request. We were talking about spinning the turntable out there. You know these turntables. Somebody did a special. Might have been on 60 Minutes or so. They were talking about how albums are coming back. I mean that they've actually been coming back in a big time out there. Now that's pretty cool, you know, that's actually. Now I haven't seen it. I mean, I guess I don't spend too much time inside the stores these days. It's kind of hard for me to believe that you can walk into a Best Buy and see the racks of albums out there again. So it must just be all stuff coming from the internet. But there's some great turntables out there. We can talk about all that for a long time. In any event, I did have a request. That was the segue into this. We were talking about requests, and our man Al inside the control room going ahead and spinning some tunes for you. But I did have a request to go take a look at Gilead Sciences. GILD is the ticker symbol, and the request is to take a look at it, as a longer-term buy. And where would that buy point be? So we're going to take a look at the ideal buy point, and we're going to start off by looking at the monthly chart. Now, the monthly chart here for Gilead shows that it made a high for the month of October 2014. It did that with 358 million shares, and then its most recent low was last month. It pulled back with 440 million shares, so it pulled back with some volume out there. You're trading inside, you're really trading inside two swing points. You're trading both inside that October swing point. You're trading inside last month as well. So I'm going to default to last month and say that your best longer-term buy on Gilead is going to be a test of this low. The low being December for the December low out here, which is 85.95. Now, let's go switch over to the daily. Let's go see where's 85.95. What do we have out here? 85.95 is going to be that trading session from December 23rd. So we saw, in this case here, we saw Gilead gap down. So I'm going to put this blue horizontal line across my screen out here. So the gap was from December 19th to December 22nd out here. And that's at 104.64. We saw price a couple days ago get up towards that level, never actually tagged 104.64. but got up to a high of 103.83. It was 14 million shares going against that benchmark downdraft of 72 million shares. And then the very next day, which is at December 23rd, 61 million shares. And that's during the holiday lightened trading session time period. So I'm going to say your best buy is to wait and see if Gilead, G-I-L-D, can pull back into that December 23rd candle session. Is it the high that it tests and rejects at 93.50, or is it the low that it tests and rejects at 85.95? 85.95 would be your better test, and a rejection to close above 85.95 with less than 61 million shares. So that's what I would suggest at this stage of the game as your buy point for Gilead Sciences out here. I'd be paying attention to the entire biotech area as well and take a look at patterns there. But at this stage of the game, that's what I would be suggesting inside of ticker symbol GILD. Now that game plan would potentially change here if Gilead is going to go ahead and close that window at 104.64, that little downdraft area that is still open. And if it's moving into that area with volume of more than 21 million shares, then maybe the low that's in is the low that's in, because that in essence would form an A to B equals C to the upside. So because the B point on this right now is the high from January 9th, it's only got 14 million shares. I would be using 21 million shares as my benchmark, that trading session, the low from the low of the swing point, the low of the trading session from December the 19th out there. So I hope that helps you. Hey, folks, stay tuned, because talk about spinning some records out here, spinning some tunes. We've got an artist for you. His name is Basil Chapman. So he'll play some tunes for you. Of course, on Wednesday, we've got Larry Pesavento. He's in the orchestra pit out there. And then we've got Daryl Martin, David White, Tom O'Brien from 3 to 5. Have a great Wednesday, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.